Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. It is May 3rd, 2024, and I'm here to bring you a market wrap-up for the week that's just ended, as well as to talk about some trading levels for the upcoming week with the equity indexes as well as the bonds. Before I get going here, the usual disclaimer. Everything that we do at Precision Trading Labs is for educational and informational purposes only in order to assist our subscribers in becoming competent, confident traders. Precision Trading Labs, we are neither money managers nor financial advisors, and nothing that we present here is to be construed as financial advice. Okay, so let's take a quick look at the equity indexes here. And what I'm going to do is I'm actually going to show you the Dow futures here because of the fact that it'll also let me show you the Dow 30 stocks to give us a kind of an illustration of what went on today. But what we're looking at over here, this is the daily chart of the Dow here, and so we can see. This was at last Friday's close. And so we can see on Monday, we kind of more or less treaded water here. On Tuesday, there was a major thump down. On Wednesday, there was a major recovery during the day, or at least during the first two-thirds of the day. And then pretty much the last hour and a half, we pretty much gave the vast majority of it back, as evidenced by that huge wick there. And then yesterday, there was a nice move up here. And then today, there was a major gap and then a continuation, and that was caused by the non-farm payroll report, which came out today at 8:30 a.m. Eastern time, and that came in cooler than what the expectations were. And of course, given what's going on in terms of the Federal Reserve wrestling with potentially having interest rate cuts and then delaying them because of stubborn inflation, the cooler jobs report as well as cooler job wage numbers. Those two things combined kind of brought some optimism into the market today, and so we had that major move up here. Okay, if I change this, in fact, into a 1 hour chart here, we'll then actually be able to see right here. Here is the actual jobs report number. So right there, that blue circle here, right here, there was a move up when the overnight session began, and then right here, that spike, that's the evidence of the jobs report there. And then after that, we actually gave back a huge chunk of it, and then there was a gradual recovery here. So we pretty much held about two-thirds or so of that initial gain. That was the high today. And so right here, though, you can see that there was a gain of about 1.25% there. And so that's what ignited. But the jobs report is what ignited that. And we can kind of see here's the Dow 30 here, and so we could see about two-thirds of them obviously had green days, and then the remainder, pretty much some of them were kind of very lightly negative. And then here's McDonald's that was down about 1% here. Amgen and Apple really spiked, and that was as a result of earnings announcements. And then everything else we can see right here. There were varying degrees of greenness there. So that's the story with the Dow. All right. So what I want to do is I'm going to bring up the Dow, excuse me, the SPY and the Qs, and we'll take a look at those in terms of potential trading levels for the coming week. So here's the SPY. SPY, of course, is the ETF of the S&P 500. And so right in here, we can see this is actually a 2 hour chart. So right here, here's last Friday's close. And then here is this week's trading. And I'm using the 2 hour chart just to give a little greater granularity, to a little more detail to identifying potential trading zones here. So right here, here's that spike and here's that major give back that I talked about on Wednesday after the major gain during the day, and then giving it pretty much all back at the end of the day. So if it wasn't for that, I would actually say that this, in fact, would be represent a demand zone here. But because of this spike here, I have a little less confidence that if price drops here, that we would actually get a bounce out of here. Um, and so this is what's referred to as a demand zone here, though. And this is where there was an exhaustion of sellers. But the point is, because of the fact that you had this spike here, we started out with an exhaustion of sellers, and then when it gave it all back, it just kind of threw all that whole thesis out the window. So it's possible we could get a bounce out of here, but I'm much less confident that this is actually a valid zone here. If you're interested in the whole concept of supply and demand levels, if you look at right below this video, you'll see a link to a brief video that I had done that covers that whole concept of supply and demand. And so you can get some a deeper dive into that and some more information about that. So for the SPY, I really don't. I'm really not confident about any of these about this level here. So, and then below that, there's really only a level of what I would think of as more of support, rather than clean demand here. So right here, here's an area where price came up here, and then notice price dipped in here once, dipped in here a second time, came down a third time. So this I would think of as more of support than demand. Okay, so there's really nothing here that I'm really in love with. Like I said, if we get a bounce down to here, if there's a pullback to here, we could end up with a bounce from here. But I'm not really all that in love with it, so I would be very cautious about that. If we now turn to the Qs, and of course that's the ETF of the Nasdaq 100. So this, in fact, is what we had actually had this formation here, and this was prior to the close last week. This was a drop-based drop formation here, and in fact, right at the end of last week, price had returned to here, and what we expect here from this exhaustion of buyers is when price returns to here. This would be an area where there is supply left in this region, but there is no longer any demand. There were no longer any willing buyers here, but only willing sellers that were up here. And so when price returned here, it took a while to kind of chew through that supply. But then after that, earlier this week, we ended up with then price dropping down through Wednesday into early Thursday, and so our number of our subscribers had very successful bearish trades here, either by shorting the Qs, or though most of us pretty much just bought puts based on this supply zone here, and so that was the story there, and we can see here, in fact, that was 1 unit of risk for our trade. Okay, and so getting down to this area of demand here, or potential demand, that was about a 2-to-1 trade here, and most of us kind of got out pretty much right around at the top of that zone there. So that was a pretty successful trade for a number of our subscribers here. So if in fact we do get a pullback here, that's it's about 3% below where we are now. I would tend to regard this, really, if you look at the daily chart, this is more of a pivot, I think, than anything else. But it's really not clean demand. And again, that's just as a result of that huge wick here. So that's the story with the Qs. If we take a look at the Russell 2000, so here's the IWM. Okay, and in fact, that actually, see right here, of course, there's that same wick, of course, that we've seen on all the other charts. Right here above here, though, in terms of the supply zone, that actually kind of lays out relatively cleanly here, and so that's about 1.5% up. So if we get if on Monday or Tuesday we end up with a move up here, this might actually be a place where we could, in fact, put on a bearish trade with the Russell here. Okay, down here, there is this area that we could end up if there's a pullback here, we could end up with a short-term bounce out of this region here, and that's sitting at around the area of, let me just throw in a couple of lines here, right here. We could see a bounce. This is an area of kind of weak demand. If I drop this thing down to about a 1 hour chart or a 30-minute chart, but you could end up with a bounce out of here. If we do notice though, this is sitting right just beneath the major round number of 200. So I would kind of keep. So normally, from a technical basis, I'm not in love with this region here. I think, but the fact that it's sitting just below the 200 number, it's quite possible that the 200 number could get tested, could go below here, and then we could end up, in fact, getting a bounce out of here. So if there is a pullback on Monday, I would be at least keeping an eye on that. So that's the Russell 2000. That is obviously a short distance below here. That's about a little over 1% down below, and then of course the supply zone here is a little less than 2% above where we closed here. Actually, about 1.5%. So that's the Russell 2000. And then lastly, we'll wrap up by taking a look at the bonds. This is the TLT ETF. This represents the longer duration bonds of 20 years and above. So right here, here's where we closed here at just below the 90 mark here. So down below here, about 2% down, here's a drop base rally formation here. This is where we had an exhaustion of sellers here, where it consolidated and then popped there. So this would be an area where we'd be looking to buy. And then above here is an area where conceivably it could bounce out of here. But in fact, I would actually look, if the bonds start to rally, I would actually be looking to really this area in terms of placing a bearish trade. This one is structurally, it leaves something to be desired. So I would be actually looking here. And this would be an area where I would be looking to put on a bearish trade. And where we could express the bearish trade, of course, would either be to short the TLT, or better yet, to put on a bearish options trade by buying the bonds. So, excuse me, buying the put on the bonds. So anyway, those are our trading levels for the upcoming week. Thanks so much for your time. I'll see you next time.